a bit ahead of the target is always good, so that you have no fear of the unknown that might come your way over the next 4-5 years. But more importantly, it's not just about the quantity. It's about the mid-scale segment being addressed by the custodian of Indian hospitality, that's us. And the mid-scale is becoming more and more important. Obviously, luxury is luxury, and the hallmark of luxury is the Taj. That stays the way it is. But I think going forward, if you look at 3 years, 5 years, 7 years from now, the needs and wants of those 400, 500 million people, 1/3 of India's population using hospitality as one of the ways for business needs as well as leisure needs, we need to be at the forefront, and Ginger takes charge with 250 plus hotels in that segment, and why not? That's the mandate we have, and we need to deliver on that.
In fact, talking about Ginger and the new brands also for Cumin, Amastace, in fact, saw that 27% year-on-year growth this quarter. But what is your broader strategy for these segments?
Well, the Cumin has had a very good evolution. What started as a home delivery service at the peak of COVID found its home as a QSR complementing the Ginger brand, which sits within our company in Roots Corporation. So one being a root spice and other being the root vegetable. It just seems like, everything just fell in place in the same family. And it's very successful. It's become actually even more popular than the Ginger Hotel. So the Cumins are doing very well. Maybe because it's also associated with very good memory during the COVID times. So that is moved well. The homestay business is a very small business today, but hopefully in 3 to 5 years it scales up to 1,000 plus. Today we are at 300 homestays, and I think once we have that scale, it will become very interesting. But very importantly, Ginger is kind of forged ahead now and getting very close to double-digit contribution to our top line, which means 10% of our business. Very few companies can, in any sector, can say that something reimagined and newly added could come to 10% of their core business, which is in our hotel segment. So we are very pleased with that, and it's more crisis resilient because of a variable cost model, and also it's very margin accretive. So I think all in all, very pleased with this development.
And also talking about development, something exciting is in terms of the acquisition as well. If you could talk to us about that, the rationale behind it as well.
The rationale, as I said, one was to get scale. Okay. Second was to get the management bandwidth of a young family which started this with very limited means and scaled it up to 135 hotels in one, another 20 in another one. So a portfolio of 155 properties with some interesting brands, the opportunity to rebrand the majority of the portfolio into Ginger. So I think all in all, and at an affordable price, because what they built was completely based on management contracts, which some people call asset light. And if we add some revenue share projects to it, I would call it capital light business. Absolutely in line with our strategy. And it gives us an opportunity to rebrand existing portfolio in the kind of markets we want to be, and double the size of hotels in operation and double the size of the portfolio that we have in hardly 12 to 18 months time. So we are very pleased with that.
Talking about the other aspect of this, the hospitality sector in fact has witnessed a sustained demand momentum. This is for the past 3 years. So how do you view the consolidation given the particular outlook as well in that prism?
I think hospitality, aviation and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. Okay. All those who have looked at this sector as a cyclical sector were not wrong, but if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it, but demand in India is continuing to outpace supply, and to get new supply in India is not that efficient from time perspective. It takes much longer than we all think. with all the permissions, the construction, the weather constraints, the nature itself. So I think that way getting existing hotels to become part of your portfolio is a very good way forward without neglecting the new construction. So we are building, we're going to open in less than 6 to 8 weeks the new Ginger in Ekta Nagar right in time for the Ekta Divas. We have just acquired with the help of our group the property at the Calcutta airport, which will convert within the next 12-14 months to Ginger. On top of that, we are also building 300 rooms at the Mopa airport. We'll open next year at the Bangalore airport. So we'll have a lot of billboard locations which will take the branding and the development charge for the Ginger brand.
Since I come from the city of Bengaluru, I'm looking forward to that one the most.
Absolutely.
Perhaps.
It's going to be the first combo hotel of India with 400 rooms under Vivanta and 350 under Ginger, complementing the 400 rooms Taj that is already in operation at the airport.
Nice.
So taking our total to 1200 rooms just at the Bangalore airport.
So ask you this, since we were talking about the other plans that is also there with planned openings like Taj Frankfurt as well, how important are international markets for your overall growth strategy? And also talking about that, which regions do you really, look at in terms of the growth factor as well?
Internationally, we're only looking at Southeast Asia and selective presence in Europe. Yeah, that's true. In the first week of February, we will open in Frankfurt. That's a hotel which has been undergoing renovation for the last 2 years, and more or less we are coming to the finishing stage. We are opening 2 hotels in Bhutan in the next few months, and then of course others will follow. But our strategy for international is very much limited to the Taj brand in key gateway locations and markets, and the rest of the focus remains pan-India.
All right, and also given the aspect of it, the planned capex of 1,200 plus crore is what we understand for financial year 26.
Yes, that's for this year.
Yeah,
so
how
over the next 4-5 years, it will be anything between 5,000 to 7,000 crores.
As part of the strategy, the